Your bank account is showing you a number that mostly isn't real. This is Ben. Ben just deposited 100 euros, his grandma's birthday money, and he assumes it's sitting in a vault somewhere, possibly near some gold. It's not. Within minutes, most of it has been lent to a stranger. But Ben's balance still says 100. The money didn't move. It multiplied. So who created it? And what happens if everyone wants theirs back at once? Let's back up. Ben's deposit arrives at the bank, and in his head, the process is simple. The money goes into a drawer with his name on it and waits there patiently, like a very loyal dog. What actually happens is stranger. The bank keeps a small slice and lends the rest to a man named Dave who is buying a used kayak. Ben's app still says 100 euros. Dave is now holding most of those same euros. Somehow, there is more money in the world than there was this morning. Nobody printed anything. The bank just typed. This trick is older than banks themselves. In the 1600s, London goldsmiths rented out space in their vaults. Actual gold, actual vaults. Ben would be thrilled. Customers got paper receipts. Then the goldsmiths noticed something extremely convenient. People almost never came back for their gold at the same time. So they quietly started lending out receipts for gold that wasn't entirely there. More receipts than gold. It worked. Everyone got richer, and modern banking was born. History's most successful, they'll probably never check. But here's where it tips from clever into surreal. For centuries, the polite story was that banks lend out your deposits. Then in 2014, the Bank of England, one of the oldest central banks on earth, not exactly a conspiracy blog, published a paper admitting, in careful academic language, that it's the other way around. Banks don't lend deposits. Loans create deposits. When the bank approves Dave's kayak loan, it doesn't fetch Ben's money from anywhere. It types a brand new number into Dave's account. That number is new money, created on the spot. Around 97% of all money exists only like this, as numbers banks typed into existence when someone borrowed. The coins and notes in your pocket? A rounding error. And that small slice banks are required to keep in reserve, just in case? In the United States, since March 2020, the required minimum is 0%. That is not a typo. 0. Which brings us back to Ben's question. What happens if everyone wants their money at the same time? We know because it keeps happening. In 2023, customers of Silicon Valley Bank heard a rumor, opened their phones, and tried to withdraw $42 billion in a single day. The fastest bank run in history, conducted largely from couches. The bank didn't survive the week. Because that's the punchline of the whole system. Your balance isn't money sitting somewhere, it's a promise. And a promise only works as long as nobody demands all of them at once. So why does Ben's 100 euros still feel safe? Because after the bank runs of the Great Depression, governments invented deposit insurance. In Europe, your first 100,000 euros are guaranteed by the state. So grandma's birthday money is fine. But notice what the insurance actually does. It doesn't fill the vaults. It just keeps everyone calm enough to never check. The gold was never the point. The calm was. And that's worth sitting with for a second. Tonight, you'll probably glance at your banking app. A number will glow back at you, your salary, your savings, your own version of grandma's 100. That number works because you believe it, and because everyone else believes theirs, all at once, every single day. A quiet, planet-sized agreement not to look behind the curtain. So what would you call a thing like that? A lie? Or the most successful trust exercise ever invented? Your bank account is showing you a number that mostly isn't real. And tomorrow morning, you'll trust it anyway. So will everyone else. That's exactly why it works.